I've got a buddy that he and I just are totally different on the perspective of what we think is going to happen. I forget who he listens to a guy out of Miami that is just saying something along the lines that layoffs are coming. Employers are not going to be able to pay their employees. And he says, Mike, you keep talking about how the housing market's not going to crash or go backwards, but what happens when they do these layoffs and the average income or average person is their mortgage is 40% of their income and they get laid off? How are we not going to how are houses not going to lose value when people are going to start laying off and having all of a sudden all these people are laid off and they need to sell their home and get out of it? What do you guys think about that?
Well, so I have a client like this right now, actually, and he's like, I'm invested in all these precious metals. I'm like, you should do that. Like that should be part of your investing strategy, right? Like,
Right.
but thinking of it as a doomsday, like I have to have this. But he kind of said the same thing, and I said, well, you're right. Recession does equal there are going to be job losses, right? There are going to be less jobs available. But when you look at where we were not even a year ago, we had more jobs available than people actually wanted to fill them. So when you start thinking about that, like even the most minimal job loss, like I know somebody that's going through they're kind of doing a career change, right? They lost their job with, they were in recruiting, and well, recruiting right now because most people, while they might be hiring for some positions, they're not hiring as much as they were. There are other jobs available, right? Like it
Right.
might not be in recruiting, but it's not like they're not going to be able to walk out and find a job in a couple months.
Right.
So that's what I would say to them is, yeah, we are going to see job losses. We see it in every recession, right?
Right.
Are we going to see it to the extent of 2008? I don't think so. I don't think it's even going to be remotely close to that. But if we got up to like 4.5% unemployment, that would be honestly, that's pretty normal. Would you agree with that, Steve?
Yeah, I mean, I
Because what are
think
we?
there's
We're like just below 4 right now, correct?
yeah, I mean, the jobless claims. I'm looking at some of the reports here. Jobless claims are up from its levels in over 2 years, but again, these are all numbers that are very difficult to actually use as predictive modeling numbers, really, because they're skewed to some degree. You're comparing time periods to time periods, but the reality is, you're right. I mean, unemployment running around 4% is not unusual. So the other side of the coin that you're discussing here is about the housing market, in my opinion, is there's still a shortage of supply. And so um, pricing is always determined by demand and supply. I mean, that's economics 101. So if
Right.
supply is still high, then demand and pricing will continue to be where it needs to be to offset that low supply. Sorry, the supply is low. Sorry. And
Right.
that means demand is outweighing supply, which means pricing will continue to tick up as long as that's the case. And that's really the determiner of price, right? So if somebody talks about price, it's really supply and demand questions.
Mhm.
You can argue, which is what he's arguing, that the demand will go down, is what he's trying to argue, because unemployment is going to be there. But I'm sure you guys are seeing in your world, I can't speak to it, but the supply is down from what I still hear.
Yeah, way down. I mean, and Mike, you can probably attest to this too. I remember talking 2 years ago. We're like, "Holy crap! There's like no houses." Well, it's like even worse now
Yeah.
than it was 2 years. Like I'm like, there's no way it can get worse than 2 years ago. And then as we sit here now, it's way worse than it was two
Right.
years ago for actual supply. And then that and I always kind of go back to November, December of last year when we actually did. If you could see a real-time tracker of actual home appreciation and things like that, we did kind of hit a plateau there in November, December. A lot of people were extremely freaked out that rates got over 6, actually got up into 7 in December. People were extremely freaked out, and it still didn't go down. You
Right.
know what I mean? We lost. I don't know. I don't even know if it's measurable, but I think if you looked at it, at least from my standpoint of actual clients pre-approved, I had probably 75 to 80% of those clients that were pre-approved saying they were going to take a break because they wanted interest rates to come back down.
Right.
Now, since then, people have changed their minds. Like, look, we're going to have to deal with this. Maybe we deal with it for a year or two and then refinance. But what they started to see was people started flooding back in the market, even though they didn't like where interest rates were. So
Right.
because they knew they could still afford it, they just might have to deal with the short term higher payment.
Right.
And then deal with it in a year or two when they can actually refinance into something lower. So
Right.
even when we lose people in the marketplace because of interest rates or whatever it might be, there's so many people in the marketplace compared to how many houses we have. Even if we lost 50% of those people because of job loss or interest rates or whatever, or affordability, you're still looking at a pretty high demand for supply
Yeah.
ratio. So
Right. I think we need, I think I try to put myself in my clients' shoes, and I think, me, like 90% of the world, or at least around here, I guess, we're in sub 3 interest rates. I think if we got to that 5 number, like, it's not a conversation. It'll never come up at the dinner table of possibly moving. If it got down to the 5s, I still don't think we would move, but it would still be a conversation. And if we can get it to be a conversation, then I think we can start seeing the inventory come back and people are like, well, okay, maybe we can, but nobody's gonna go jump ship. It's divorce, death, downsizing, upsizing.
Yep.
We're in a great house. We don't need a different house. But that's what we were dealing with the last 3. People were like, "Well, I can make 100 grand and go buy, another house," and that's just not happening anymore.
Yeah. And I'd throw relocation. I don't know if you said that.
Relocation.
Yeah.
Yeah.
That's another, those are really the only areas that, like, relocation and death and things like that. Those are the only areas where you're really seeing people actually sell houses.
Yeah.
And I always bring my parents up as a perfect example. They have a house. They don't need the move. They have a ranch, things like that. They would like to move at some point
Right.
into a condo, not cut grass, things like that. And they'd have to take out a smaller mortgage, but when you start looking at that, you're like, all right, our mortgage now, which is going to be probably a little bit bigger than what we'll have at a 3% interest rate, we go take, slightly smaller mortgage, our payment's actually going to go up. So when you're actually downsizing, you're upsizing in payment, and they're like, we don't want to do that right now,
Right.
if they don't have to. Now, if they have a 2-story and maybe some health problems and things like that, maybe it would be a different story. But
Yeah.
with where they're at, it's like, we want to move, but it's not a necessity right now. So
Exactly.
Yeah, I mean, you also was talking about the interest rates, how much it affects the world that I live in. And as I look at the stock market today, it's bouncing in the green side today, which is obviously an indication of where the interest rates were responded to. And it took a little time to kind of digest the hawkish mindset of the Fed chair. But the reality of that, even like people who have conservative portfolios right now, are waiting for the interest rates to turn also, because people don't realize this, but bond portfolios go up in value as interest rates fall. So people who have conservative portfolios right now are also sitting on their house, so to speak, like you guys are saying. They're not making changes and not making moves because they're waiting for the interest rates to flip to the other side. And so their conservative portfolios, bond heavy portfolios, will begin to increase in value as interest rates fall. People don't realize there's an inverse relationship to interest rates and to their portfolios that are bond heavy. So I always like to share that because it's very similar to what you're talking about. Is the mindset is, I don't want to make changes until things change, and interest rates do affect that decision. Whether we like to believe it or not, they affect it pretty greatly, and that's the reason why they know they can control the indexes we talked about, the CPI and the PPI, by the interest rates themselves, by raising them. So it's a lot to do with interest rates. I mean, there really is a lot to do with interest rates. And
Well, I appreciate you both.
Yeah, it's hard to predict these things, I'm sure, on your side, Justin, because of the 10-year yield can bounce depending on what the demand is for the investment of the 10-year yield.
Yeah. And the problem, most of the problem that, when Fannie and Freddie and these investors that hold these mortgage-backed securities, when they go to try to sell them, if you're looking at from an investor standpoint, you're buying these, these mortgage-backed securities. When the tide, changes, you're stuck holding these mortgage-backed securities that are at 6.5 or 5, wherever they. Well, when these refinances come swiping through, your investment's going to get wiped out, right? So if you don't hold those for a certain period of time, you're not going to make money. So if we don't have, we probably have way less people, investors buying these mortgage-backed securities because they're like, I'm not buying this. And then 2 years later, I get hit with, a wave of refinances and I don't nearly see the return that I was expecting on it. Or worst case, they take a loss in it. So, so when you see the no one's buying these mortgage-backed securities, that's what affects mortgage rates the most, right? So if they're not buying them, that's where those, we start seeing those spikes in interest rates. And we had an odd thing happen when we saw them spike about 2 or 3 weeks ago. What was happening was a lot of these banks were selling off their investments. Well, some of their investments were held in mortgage-backed securities. For whatever reason, they were selling them, right? Well, we saw a spike in interest rates because they were selling off these mortgage-backed securities to try to get some, liquid cash for account holders, because a lot of people were taking their money from checking accounts and savings accounts and actually putting them in the money markets. Well, there's certain rules behind that. Banks cannot use that they can't use money market accounts
For the reserves?
giving out
Right.
out car loans and this and that. They can't use that money because it's in the market, right? So everybody started moving their money. And so what made the banks essentially sell off some investments to be able to loan out car loans and things like that. So it's a convoluted, and the easiest way is right now is people aren't buying these, mortgage-backed securities. That's why we're kind of stuck at a plateau. And until we start seeing a lot of, maybe 2 or 3 pauses in a row, I don't think we're going to see anything significant happen. So,
Right.
Yep.
Well, that's all good stuff, fellas. I appreciate you both, and obviously time will tell on what's going to happen. But
No, I appreciate you hosting these to kind of
yeah,
get the word
absolutely.
out.
no, these are good for our clients, man. I think that's our job, right? Is to inform. So our clients, I think all of us are on the same page on how we can treat our clients, and it's the more information we can provide them to make the best decision for themselves, the better. Instead of I think because we understand that everybody's different. It's not a black and white world where this way works for everybody and this way works for someone else. And if you can just give them as much information as possible, you're doing your job.
Yep. I'd agree.
I agree.
Well, enjoy the rest of your week,
All right,
fellas, and we'll talk
appreciate it.
soon.
Yes,
Sounds
sir.
good. Thank you.
Good
See ya.
seeing you
guys.
guys.
Bye.
Bye now.